All right, welcome back. The time now is 6:22. Yesterday, we got another report on the weekly unemployment filings across the country, learning that 3.8 million more Americans had filed for first-time unemployment. That brings the total to more than 30 million since the coronavirus crisis began here in our country. So joining us now to talk a little bit more about the economic impact, Dave Anderson, with financial advisor and managing partner with Moneywise Wealth Management. Dave, good to see you as always. Thanks for being with us.
You bet. Anytime, Maddie.
All right, so let's talk about something you just mentioned to me, kind of a very strange dichotomy here. We have these 30 million people who've now filed for unemployment, and yet the stock market had a rebound in April, right?
Yeah, it's really crazy. I mean, had you told me a year ago, you said, hey, by the way, next year in April, there's going to be over 30 million people that are applying for unemployment. There'll be a worldwide pandemic. Businesses going out of business. Oh, and by the way, the stock market will be up 17% in April. I would not have believed you. So, I mean, if there's anything that's shocking me right now, it's the incredible disconnect between the stock market and the economy.
What's going on there?
Well, you know, three things you have to remember about the stock market. Number one, it's not the economy. Number two, it's not the economy. And number three, it's not the economy. So many times when the economy is weak, the stock market will be strong for a few reasons. Number one, investors are betting on the future. So when the Fed came out and was very aggressive saying we'll take any measure to save our economy, that got traders thinking positive. And so thinking, hey, we're going to invest. The other issue is there's really no other place to go because interest rates are so low right now. It's hard to invest anywhere else.
So if it's not the economy, if the stock market isn't the economy, what's its effect? What's its relation to?
Well, it does ultimately impact the economy, obviously. But what people think is that if the economy is strong today, the stock market is strong today. And if it's weak today, the stock market's weak. That is not the case. So what it is showing you is it's more of an indication of where we're going, not where we are right now.
So it could be a positive sign in that case?
It could be a positive sign. I mean, investors certainly are betting on America long term. So while the pain right now is great, long term, you know, investors are saying, hey, I think America's going to be okay.
And this morning, though, you know, on the flip side, we saw Dow futures are down about 400 points, breaking that streak that we've seen in the last few days. Do you think things are going to change in May? It is a new month, or do you think this is just going to be kind of one of those things where we go up and we go down, but overall we could see a continual upward gain?
Yeah, I think we're in for some volatility. So I think we're going to see times that the market goes up and then there's going to be some really painful days. So just expect a little bit of both for the foreseeable future.
Okay. And on that, you know, on that same aspect, we have seen so many people filing for unemployment. We've seen the comparisons between the unemployment losses to the Great Recession. We know it far exceeds what we ever saw during that. And, you know, we've heard the comparisons to the Great Depression. Most of us has never lived through an economic time such as this here in our country. What else can we expect going forward?
Yeah, well, you know, you really want to prepare because we don't really know what to expect, honestly. We know the jobs are mounting and it's getting worse, but we really don't know for sure how long this is going to last. So what I would tell people is hold on to your hat. If you have cash, make sure you hold on to that just in case you're going to need it. Really be thinking about your financial stability and everything that you can do to increase that stability because this is going to last. This is going to last a while. All
right, David Anderson with Moneywise Wealth Management. We are out of time this morning, but thank you for your insight this morning, sir. We appreciate it.
You bet. My pleasure.
We'll be right back.